Good morning, it's Harvey Jackson. Just going to get through a slower news day as it's Thanksgiving for the US, but I'll just maybe cover some other markets as well. Uh, I was doing a presentation up in north of Yorkton yesterday, and I brought up this slide, and I'll talk about it here just as well. Now there were some questions from people in the crowd. Why is it that I might have only 12 or 12 and a quarter million metric tons crush capacity? Even though we've added all that capacity, it's just we're not on pace as of right now, and it's unknown when Cargill plant is going to get going, and stuff like that. Like even the export number was actually in question, and we're not even at pace to hit 6,500 uh, uh, metric tons of sales. So yeah, but the reason I brought up the slide is actually to talk about the yield, and that is the Saskatchewan yield, 42.4 that put out by the Sask government. Now, are they always accurate? Well, who knows? Nobody's going to have the guess that's 100% accurate, even if they say that they do. There's going to be something that's going to be a surprise in there. But with that number and the carry forward, you're looking at 23 million to crush and export, and you use up 19.1, you're at 3.8 million metric ton carryout. If we are planting more oil seeds in the world, and that's been suggested in different countries that there is going to be a lean to get a little bit more oil seeds just based on profitability. U.S. is going to do it based on crop rotation as well. Brazil continues to plant more. Black Sea is looking at more oil seeds as well. So you've got a lot of pressure in the oil seed market. Let alone we're going to have our stat scan next week, and we're going to have some actual numbers rather than just guesses here. So Edward Vannon put out a where they are as far as their program, and I just like the statement that he said. The beans are not trading fundamentals, but they're political beans, and I thought that was a pretty good statement because that's what the market is doing. And I said it a few different times when Trump says the beef prices should go down, they go down. Egg prices should go down, the egg prices tend to go down. He does have a pretty good lean to the market. If he says it's a good day for the stock market, you should be probably going long. Those things. Bird flu poses risk of pandemic worse than COVID. Well, okay, you put up this statement, and this is not happening yet. They want preventative tools in there. Well, if you're going to talk about what can happen, there's nuclear out there too. So anyway, Cargill says it does not plan to close U.S. beef processing plant, and that's all counter the JBS and Tyson Foods and everybody having trouble to make profit, and especially where there's no cattle in the beef market. And the statement here, beef processors are split between contraction and investment, and Cargill's putting some more money into efficiencies, of course, and because there's a supply squeeze. But you got to remember, Cargill is in both in Canada where there's beef, and they are in Mexico as well. How much processing they have down there, but yeah, they're in multiple different countries where maybe the Tyson isn't in the same kind of exposure. And there's always this other feed demand. What is that going to impact later on as well? It's something that we should be watching. Bayer unveils a new soy seed for Brazil. Yeah, they're the largest grower of beans on the planet. And in Acta 5, there's going to be 5 different technologies put in there. So you can spray it with dicamba, glyphosate, glufosinate, 2,4-D. You won't be able to get rid of this plant unless you have tillage, I think. Uh, Susan Stroud just had this visual, but she also put this caveat at the bottom. I am no way suggesting that I'm about to rocket north of $5 period, but he's just comparing the December corn futures and inflation. Pretty cold up in the prairies. That's all that's showing. Snow looks like it's going to actually accumulate towards the end of next week, or not this weekend. The following weekend, we're going to start to see some more snow hit the province or the prairies. Drought monitor map, and just showing you a different way. The Palmer drought index. It does not show the same as what we have previously shown for drought. And I'm looking at just precipitation anomalies. Really nothing really showing up in any great extent on any parts of the map here. Canola is trading, so is rapeseed. I believe, I think palm oil actually traded, and it's finished trading already as well. So there's not all things, but it's just going to give us an idea what it might have done yesterday as well. So canola is up 652. Rapeseed is up $1 as well at 484. Soybean oil traded up a half a penny. And so a good move there yesterday. Crude oil traded flat and down just slightly. Soybeans traded up 7.5 cents, and then your spring wheat traded up 3.5 cents. Your hard red winter traded up 4.5, and your Chicago traded up a penny, or 1.75 cents. Milling wheat it traded up as well. It's at 190, and the Canadian dollar is actually just slightly down. I had showed this slide, and I had a grower that said that there was a 4% interest rate that they can actually borrow against. And when I plug that number in with the cost of storage at 5 cents per ton per day, I know the commercial rate is 12 cents. I just don't want to make it zero. Not too many farms say that their storage is free and the cost of storing grain is free. But just using interest rates to calculate your storage rate plus 5 cents per ton per day, your full carry, just to go from January to March futures of 59 days, it's $7.17 calculated what the storage cost would be at that 4%. And the last trade was at 13.2, so it's 184%. The market is telling you to sell future, it's going to pay for your 4% interest rate. Even at 10%, it's still 100%, over 100% or very close to it. But if anybody wants to talk about that directly, I can maybe show them or share my sheet, my calculator here. Canola, kind of trading, just chopping sideways. I did put in an upside target for downside protection, some more protection at 658. And I just picked the previous high right there, 658.8. So let's call it 658. You'd be short the market here, just below the 660 basically. Same thing, just picking previous high, and you have to go back a little bit farther, but you're looking at 678 if we're going to short the new crop. So 658 on January, 678 on the November of 26. European rapeseed, still chopping along. It's actually looking like it might try to get back into this 61.8 retracement value, which would be a good thing. Soybean oil, nice day yesterday, recovery. Soybeans actually had an okay day there as well, but when you look back at some of those other candles that had wide ranges of trade, it doesn't look so spectacular, but it was at green, and green is good. Palm oil, good recovery there as well, back up to your short-term moving averages. Crude oil still continued to be right in the middle of this channel on the downward move. Canadian dollar recovered some as well yesterday. It does not look like we're going to recover with any great strength here, but yeah. U.S. dollar index still trading below the 100, which is a good sign for the U.S. traded commodities if it doesn't gain too much strength here. Wheat you can see that it had a pretty good candle, but it basically traded to almost where it opened, so unchanged day. Kansas City, your Chicago, all a little bit green on the day yesterday. Your French milling wheat back to almost making new lows here. So if there's any indication you're watching the French wheat, and if it's going to translate to the North America or the world price of wheat, because they are a fairly strong exporter, it's something to pay attention to. All the meats actually had a decent recovery from the lows that we've seen. That's all I have for you. StatScan. Today we're in Moosomin at the Canalta 2 to 5.